Today, we're breaking down FIAX, the Nicholas Fixed Income Alternative ETF, an actively managed fund designed to generate income through a combination of short-term U.S. Treasuries and a defined risk options strategy. FIAX is not a traditional bond ETF, and it's not an equity income fund either. Instead, it sits in the middle as a fixed income alternative that blends capital preservation with option-based income generation. At its core, FIAX holds a short-duration portfolio of U.S. Treasury securities, including T-bills, cash, and cash equivalents. This portion of the portfolio is designed to provide stability, liquidity, and interest income while helping limit interest rate risk. The Treasury sleeve also serves as collateral for the fund's options strategy. The income generation engine of FIAX comes from its use of vertical option spreads across multiple asset classes. Rather than selling uncovered options or using leverage aggressively, FIAX employs defined risk spreads, meaning both the potential gain and potential loss of each position are capped from the start. The fund trades options on ETFs and indexes, not individual stocks, which helps diversify risk across broader markets. Each options position can be either a credit spread or a debit spread, and the fund uses flex options that may expire weekly, monthly, or quarterly. In a debit spread, the fund buys an option closer to the money and sells another option further out of the money. This structure costs money upfront, but benefits if the underlying asset moves in the expected direction. In a credit spread, the fund does the opposite. It sells an option closer to the money and buys protection further out of the money, collecting premium upfront while limiting downside risk. The premiums collected or paid on these spreads are influenced by a combination of option pricing, dividends, volatility, and the price behavior of the underlying assets. This allows FIAX to generate income that is not directly tied to bond yields or equity dividends alone. Importantly, the fund's advisor has full discretion over which options positions are selected, how long they are held, and how they are sized. FIAX may hold up to 10 credit spreads at any given time, with a maximum exposure of 20% to any single ETF or index. This helps prevent over-concentration in any one market or asset class. Only a small portion of the portfolio, typically between 1% and 10%, is allocated to the options strategy itself. The majority of assets remain invested in treasuries and cash-like instruments. This design is intended to limit volatility and drawdowns compared to more aggressive options-based income funds. FIAX also seeks to limit its use of leverage, which further distinguishes it from many alternative income ETFs. Rather than amplifying exposure, the fund emphasizes controlled risk, predictable positioning, and capital preservation alongside income. From a portfolio construction standpoint, FIAX may appeal to investors looking for an alternative income source that behaves differently from traditional bond funds, high-yield credit, or equity dividend ETFs. Because returns are driven in part by options, premiums, and volatility conditions, FIAX may perform differently than conventional fixed income strategies across market cycles. That said, FIAX is not risk-free. Option strategies can underperform during sharp market moves, extended low volatility environments, or periods where spreads do not behave as expected. As an actively managed strategy, results also depend heavily on manager skill and execution. The bottom line is this: FIAX is a fixed income alternative ETF that combines short-term treasuries with a disciplined, defined risk options strategy. It's designed for income-focused investors who want diversification beyond traditional bonds, with an emphasis on risk control rather than maximum yield. If you found this breakdown helpful, make sure to like the video, subscribe to the ETF Investor, and comment below. Do you use option-based income ETFs in your portfolio, or do you stick with traditional fixed income?